So in most of my videos, I usually show you guys while trading a live account. So usually when I'm trading a live account, in my analysis, sometimes I leave out some important information that every trader should know, that you guys should know. Okay, so I've decided that I should make another video or other videos that I can explain to you the fundamental information that every trader should know, the fundamental information that I may forget to put in those live trading videos. So in this video, I've decided, let me start with some patterns that I need to explain to you. So while you are at it, please take a minute to go and subscribe and hit the like button. Please don't forget to hit the notification bell so that you won't miss out when there's an update. Now let's jump right into it. So in this fundamental information, I'm going to include candlestick patterns informations. I'm going to include the risk management strategies. Also, I'm going to include the top-down analysis. So this information, usually they are not included in live trading videos. So I just figured, why not just create this video so that people understand when I make a video of live trading. Okay, so with me here is a volatility 25 in the day one time frame. So when analyzing a forex market, there are a lot of things that you should consider. The first one is which time frame are you using? So usually people like to analyze in 5 minutes and 10 minutes and 15 minutes, but mostly in 5 minutes and 15 minutes trading, there's a lot of fake breakouts, fake outs, and a lot of things happen because it's a lower time frame. But however, if you look at the market at a higher time frame, it shows true information that is resistant of all those fake outs and anything that may fool you to enter a wrong trade. So after analyzing using the day one time frame, you have to move on to lower time frames so that you can confirm whether your trade is ready or not. So this is what we call the top-down analysis, whereby you start analyzing from a higher time frame and then you move on to a lower time frame. Okay, so basically in this one I'm going to show you how to trade a trend line that is usually a rising or a falling wedge. So I'm going to identify one trend that has been respected for a long time. So the first one here, as you can see in the day one time frame, we can put some bigger trend lines, like for example this one. So as you can see guys, this trend line has been respected quite a number of times. This means that it is legit and it has been respected for more than 2 weeks or even more, because each candlestick represents 1 day. Okay, so as you can see, these are bigger time frames. So we're going to put another trend line that is connecting the higher highs. Okay, as you can see. Also, another thing that may be forgotten in those live trading videos, when you draw your trend lines, please make sure that you are connecting your trend lines to the wicks, not the body. So if we are to zoom right here, as you can see, if we are to zoom at this point, the trend line is touching the wicks, not the body, because the wicks are important. As you can see, on this one is also touching the wick, not the body. So if you draw a trend line touching the body, the real body, it means that there's a possibility that you might conclude a trade that is not yet ready, or you might even predict a wrong trade. So you should take note of that. Also, another thing, you have to make sure that you connect real tops or real bottoms, like for example the higher highs and the lower lows. So if you just assume that this one is a higher low or a higher high, it means you might lose your money, because it might be just a formation that happened. So now we move on to a lower time frame. As you can see, we've put our major trend line, and then we're going to move to a lower time frame so that we can see what the market did during during the time that it was in between the major time frames. Okay, so we move on to 4 hours. This is where I'm going to do my analysis. Okay, as you can see here, our trend lines are still respected. Other traders can can even buy at this point. Let me put an order block at this point. Well, I wouldn't recommend you to buy at this point, because you don't have enough information to enter the market. So you need at least 3 confirmations to enter the market, unless you are a pro. Shout out to other pros out there, Danial, Sejex. Okay, so those pros can just enter the market using that, because they know a lot of information and they've been in the market for a very long time, so they know formations that you guys don't know. Okay, so just know that one day you'll be there. Anyway, let me move on. However, so the first confirmation here is the trend line. Okay, and then the second one, you can put an order block that is connecting at this point, as you can see at this point. So at least we have 2 confirmations. You can enter using those 2 confirmations, because this is a support that was created in the previous market, as you can see. So as you can see, let's put a time marker here. Okay, so the setup or the support was created on the 4th of August in 2023, but right now the market, you can enter on the 8th of October in 2023. So you should know that analyzing information or analyzing the chart from a higher time frame, you can even use the formations that happened maybe 4 months ago, or even I will explain that in other videos. Now that we can say we can buy here, but that's not where I wanted to explain. Anyway, it's just for you guys to know. Let's move on to draw another trend line that was in between the major trend lines. Okay, so the other trend line that we can draw is, you can draw it here, right here, and then this one is connecting the higher highs, and then this one is connecting the higher lows, as you can see. Okay, so this one was just a fake out, as you can see right here. It was just put to confuse traders who are very aggressive. Let me show you this one. It was simply a fake out. Okay, so it doesn't necessarily work in the market, as you can see this one. So what we have to do right now is well, for other traders, you can enter at these points, but it is risky, as you don't have enough confirmation that the market is not going to break out. So like, you can buy at these points, as you can see. But since you don't have adequate information, I wouldn't recommend you to buy, because you might lose your money. The market might continue going down, which means it will form what is known as a break-off structure or a trendline breakout. Okay, so like what it did right here, it did what is known as a break-off structure or a trendline breakout. Okay, so after a trendline breakout, I wouldn't recommend you to enter the market, to enter a sell, because usually it might be a fake breakout, like what happened here. It might be a fake breakout, so it means the market just broke outside and then it is coming back into the trend line. So if you guys decide that no, the market is going to sell, then you enter the sell, you might lose your money because it's not a sell. Okay, so after breakout, a trend line breakout, you have to wait for what is known as a retest or a confirmation. So after a retest, you may safely enter the market because it is now confirmed that the breakout is legit or is genuine. Like, for example, at this point, the market, after breaking out, it went down like this and then it came back up. So it came back to a point where it should have broken back into the trend line. Okay, so but due to the forces of the forces of the market, this one is the force of the bears. The price wasn't allowed to get back into the trend line. So this is what we know, what we call the trend line breakout or the retest. So the retest, it is confirming that the market is now going back down. Okay, so as you can see, the market pushed down like this. So you can be recommended to enter at this point because it is safe, because it is a retest. Now the trend line is confirmed that it is over and we now enter after the retest. Okay, so as you can see, at this point, at the point of the retest, you have to make sure that there is a confirmation that is allowing you to identify that the market is now going to sell again. So like this, at this point, we use it, we analyze it using what is known as a bearish engulfment. So at this point, the market did what is known as a bearish engulfment. So I'm going to do another video on these candlestick patterns, because candlestick patterns are also important in the forex market, as they tell you when and when not to enter the market, because trendline candlestick formations are the fundamental information of the market. They tell you what to do. So as you can see right here, this first candlestick, the first candlestick that is right here, was fully engulfed by the second candlestick, the second candlestick being the bearish candlestick. So it means there was bearish engulfment. So the bearish engulfment is even powerful when this red candlestick engulfs two of the previous candlesticks, which included this one and this one. So these two candlesticks have been fully engulfed, which means there is very, very, very much selling power. So as you can see, after the selling power that you've noticed right here, the market continued going below. Okay, so right here, it is safe to enter at this point. So let me put the order blocks that show you when and where to enter the market using the candlestick breakout pattern. Like this, put this one right here.
right, let's change the color. Okay, and then we'll put another one. Let's change the color again. Right. Let's put it right here. Okay, so we're having a problem with this one, but I'm sure you guys can see what I'm trying to explain right here. Okay, this one is a problem. Anyway, right, so as you can see, we can enter the market at this point. We can enter the market after the first candlestick. The first the candlestick that is engulfing, the bearish engulfment candlestick, that is where we enter the market, and then we ride the market from this point up to this point. So we enjoy all these pips. Or the first take profit that you can use is you can put an arrow like this. Shout out to SageX. This is a strategy that I've seen from him. He usually puts a candlestick that is a line that is measuring the space or the gap that was in between the trend lines, and that very same gap is the one that he puts to see the first take profit. This one doesn't lie. Shout out to SageX again. He's a pro. You should follow him. You should subscribe to his channel. But this is a strategy that I've developed myself. You can see it like this. Let's put this one. So at this point, you can just take your profit and then you leave the market. So this is what we call the trendline breakout strategy. So basically, you have to look for a trend line that is respected at least 3 times, and then after the breakout you wait for your retest and then you enter the market. So without those things, please do not enter the market. Let me know what you think in the comment section below. Please don't forget to subscribe, like and comment. And also you can follow us on Telegram, you can follow us on Facebook. I give great thanks to SageX, the one who motivates me. So bye for now.